In today's video, we are going to look into some top-notched, unbelievable AI ETF opportunities for 2024. Come, let's dig in. What is AI ETF? AI ETFs provide investors with the opportunity to capitalize on the ongoing expansion of the technology sector without the necessity of selecting individual stocks. The ongoing artificial intelligence, or AI, arms race has seemingly ushered in a new era of technological innovation and stock market growth. Invest in artificial intelligence via ETF. Artificial intelligence, AI, is starting to impact jobs and is expected to continue growing over the next decade. The latest projections have the compounding annual growth rate for AI to be 42% each year for a decade. This level of growth can't be true for every company tied to AI, but the opportunity for massive investment gains is better now than it's been in years. Case in point, Meta recently announced that they are spending $9 billion in 2024 to purchase 350,000 NVIDIA GPUs to build a new level of open-sourced AI. One of the easiest ways to invest broadly in AI is via exchange-traded funds, ETFs. In this video, we are covering the best AI ETF charged for growth over the next decade, focusing on past performance. As you see, they created a weighted point system across all the different AI ETFs and objectively showcases the top performers based on their past performance and how they rank with a score. While there is no guarantee that past performance is going to equate to a sure thing for future performance, as you leverage history as a strong guide for your own investments. The AI ETFs for 2024. The first ETF discussed is Invesco Semiconductors, PSI, which focuses solely on US companies to provide a domestic exposure to its investments. PSI has a good set of returns over the past 1, 3, and 5 years, with a small dividend and somewhat of a high expense ratio. It has a lot of small and medium cap companies with their extreme swings in its best and worst years' performance. The next fund is QRA AI Enhanced US Large Cap Momentum ETF, AMOM, which breaks away from the others and leverages an AI model for its security selection based on a historical algorithm of performance. AMOM has the lowest worst year performance of any other ETF, meaning it has a little more stability in its returns. The performance of AMOM is good, but one of the lowest of the group at the 3-year level, and the highest expense ratio of all of today's ETFs. However, AMOM had the lowest worst year performance of any other ETF, meaning it has a little more stability in its returns. The list of today's ETFs includes links to resources for further research. Dividends are a top priority for investors, who enjoy a 12 to 15% margin on their investment each month. Sponsor Limits Express, a business venture, manages an Amazon store for investors, buying hundreds of thousands of dollars worth of new branded products at a discount. The more investors with better pricing, the higher the margins on their products. ETF Investment Options. As you can observe, the various investment options, including Amazon's QQ Trust Series 1 ETF, Invesco QQ Trust Series 1, Fidelity MSCI Information Technology Index, FTKI, iShares US Tech Independence Focused ETF, IGM, iShares US Technology ETF, IYW, and iShares US Technology ETF, SOX. Amazon is a prominent investor in the Limits Express model, providing future updates via their newsletter. It mentions the Invesco QQQ Trust Series 1 ETF, which invests in Nasdaq's top large cap companies. The QQQ Mini ETF, also known as the QQQ Mini, offers lower prices and a smaller expense ratio through dividend reinvestment. The Holdings ETF, with its magnificent 7 ranking, is a great fund with a lower performance in the 1 year, but still has a higher dividend and expenses. The FTX fund, which uses AI for generative fill, has a low expense ratio and has a strong track record in its performance. The Vanguard VGT fund was excluded from the list due to a 94% overlap with the FTX fund, which had a higher ranking. The iShares US Tech Independence Focused ETF, with IC symbol, is an actively managed fund that includes top companies like Accenture, a consulting group focused on AI strategies and automation across various sectors. The IGM ETF invests in 250 tech companies, including Meta Platforms, which has a great start year to date and has crushed the S&P 500. Its 5-year performance is the lowest among all of today's funds and has one of the lowest dividends of the group. Most tech companies don't even offer dividends because they reinvest them back into the company. The IYW ETF, with its symbol SSOX, has been a favorite among investors, with many of the top 10 companies being common. Salesforce is a shining star in this fund, offering its Einstein AI platform to help automate and streamline workflows across an entire organization. Salesforce's stock has grown over 8% this year, and its dividends, expenses, and other attributes are in the middle of the group. The next fund of iShares Semiconductor ETF, with its symbol SOX, is another semiconductor ETF with a 54% overlap in holdings. The SOX ETF has a 30-year return of 30%, but its worst year's performance was a meager 51%, which was the worst of the group. High-growth funds like this come with higher risks, which balance out the rewards. You also saw a comprehensive list of investment options, including Amazon, Invesco QQQ Trust Series 1, Fidelity MSCI Information Technology Index, iShares US Tech Independence Focused, ETF, iShares US Technology ETF, iShares US Technology ETF, and Vank Semiconductor ETF. Each fund offers unique opportunities and risks, making it essential to carefully consider each fund's performance and potential future investments. Lastly, the Vank Semiconductor ETF with its symbol SMH surfaced towards the top of the list this year. Also, as we compare the performance of three semiconductor ETFs, SMH, SXX, and SXX, with the S&P 500 over the past decade, this shows a 71% overlap, with SXX being overweight with AMD and Marvel companies and underweight with Marvel. The top three ETFs have a combined 10-year compounding annual growth rate of 20.9% compared to the S&P 500's 12% rate. AI is a rapidly growing field that offers numerous investment opportunities. By considering the factors mentioned above, investors can make informed decisions about which AI ETFs to invest in and what they prioritize for their financial future. Thank you for watching this video.